All right, let's go to some quick ways to make some cash. Cummins, unbelievable yesterday, said it expects to grow at an annual rate of 14% from now until 2015. That's $30 billion in sales. This really proves, Stephanie Link, Director of Research for The Street, we've been talking about this, that the replacement cycle is what's important for these stocks, not necessarily new orders, and this really proves it.
It looks good. I looked at the chart, I looked at the group. This was the best one in the group. I always like the best one in the group. Nice little pattern here. You know, it's at resistance. It's hard to get through resistance, but if it does get through this 95, you could see a quick move back to 100, maybe 103.
All right, what about, let's totally switch gears and let's go to dry ships.
Okay.
We saw the Baltic Dry Index hitting a one-year high recently and brought all these dry ships up with it.
Well, two stocks had really big moves the last 2 days that I want to show you that my friends were trying to point out. This GNK. Okay, if you look at it here.
GNK.
Big shipper, big move through resistance. Hopefully you caught it. I didn't. EXM, another one in that group. Also, decent move from the lower end. There you go, saying the names. We're a good tag team. Anyway, nice little trade here. I hate to play the laggard, but dry ships is a trader's favorite from back in the day.
Yeah.
Nice little setup. I think you could play some catch up. This thing gets through this 315. No reason why you can make some percentage back to about 375.
So GenCo and Excel you want to avoid and just stay with dry ships for that catch up?
I just think you missed some of the move.
Okay.
You know, day 3 of that move, someone's going to take profits and look at what's next, and this could be a Me Too play with DRYS.
All right, two more stocks we want to hit. LinkedIn held it pretty well yesterday.
LinkedIn was a great focus. Sperling picked it out on the virtual trade floor. It's at a key level. I have to show you the chart. We haven't talked about it in a while. You know, it started to get above this little wedge. It starts getting above this 89.90. Easy move back to about 95 where you have old resistance.
And let's round it out with Google. Ended slightly lower, relatively flat yesterday. Was performing well and then kind of pooped out.
Well, Google is so many wedges. I'm sick of saying the word wedge.
I said that.
Yeah, you
stole
said
my
that.
line.
Did it again. Well, Google gives you good trades every now and then. I do like what they're doing there everywhere. One day this stock will get going. I see a short-term opportunity for a cash flow trade. If you're not there for a macro, take a look here, Google. You'll see if I get rid of this chart, I'll do for you right now. You see another little wedge, another tight pattern. You like tight patterns because they give you entry points. I will look to buy this Google above 533 for a move back to at least the 540s, and then eventually to old resistance around 560. Might take till earnings till then.
So really quick, you still think that there's going to be some massive momentum behind Google? Because at some point, doesn't it just get too big? It has the, the Microsoft syndrome almost.
Well, I don't think the stock hasn't done anything for years. Okay, just everyone talks about what do stock splits do, for stocks. Just for Baidu. Baidu announced a 10-for-1 stock split when it was 700. It's now 145, so it's 1,400. Okay, Google at the same time was at 500 when Baidu was at 700, and Google still, what is it now, 530. It's just hard for it to move. It's perceived as a giant, but the stock has done nothing. One day this stock will get going. I'm hoping that they actually split it so more people can get involved because it's hard to buy a $550 stock for traders, for retail guys, and even some hedge funds.